Hello, everyone. Thank you so much for joining us. Today, we are going to be talking about filing for taxes as travelers and general tax knowledge as traveling healthcare professionals. We are going to be having Joe Kant from Travel Nurse Tax. I'm just going to add Ryan from travelnursetax.com telling us and educating us about all the things that you guys want to know about travel tax. We are going to just invite Joe onto here real quick. Thank you so much for hopping on, guys. We are so excited to talk with Joe about all things travel tax knowledge. Hey, Joe. Hey, Ryan.
Hey.
How you doing, Emily? Hi, Ryan. How are you?
Good.
How
Thanks
are
so
you?
much for hopping on.
Thanks for having me. My pleasure.
Okay, cool. So we have so many questions to ask you. And just a little disclaimer for everybody, this is general tax knowledge, not tax advice. If you do want tax advice, hop onto travelnursetax.com and talk to Joe personally. So just want to put that little disclaimer out in the beginning. Thank you so much, everyone, for hopping on. We're going to be talking about filing taxes as traveling healthcare professionals and general tax knowledge. So, yeah, do you want to introduce yourself, Joe?
Sure. Yeah. Thanks again for having me. My name is Joseph Conti. I'm a CPA, the owner of TravelNurseTax.com. A little bit about me. We started this business, many years ago. My wife is a travel nurse, or was a travel nurse, still is a nurse. Now she's a nurse educator. So that's kind of how we started off the process. That and a good friend of mine from college became a travel nurse as well. So we sort of felt like this was a nice niche to be in. We've lived the travel nurse life for a little while. When my wife did work as a traveler in the summer when the kids were little. So we know kind of that side of the business as well as actually the tax side. So we love working and helping travelers, healthcare professionals in general. So hopefully we can help some people out here on this call, on this meeting.
Cool. Well, we're so excited. We know that this is like a really big question mark for a lot of travelers because, we work in healthcare, we don't work in taxes. So I know every season we're always like, oh my God, filing taxes in so many states. It's such a big, confusing thing for us to go through. So we're really excited. So the first question I want to ask you is what do we need to be aware of with filing taxes before anyone starts traveling healthcare? Is there anything that anyone should set up before they jump into traveling healthcare?
Yeah. So if someone out there considering a career or moving their career into the travel side of things, there's a couple important things to keep in mind. The first one is the tax home. You've probably all heard about the tax home. If you're going to go into traveling as a healthcare provider or any traveler in general, make sure that you maintain your tax home. And there's a couple of things that go into that, and mainly that means don't abandon it. So return there regularly as a traveler, between assignments, during assignments, if possible, if need be. Spend time there. Also, you really need to incur expenses at home. Your travel expenses are one thing, but you should have expenses at your tax home that you're essentially duplicating while traveling. Doing that, those are going to help you remain eligible for the tax-free stipends that a lot of travelers get, and that's a big draw on the financial end, at least, of being a traveler.
Right.
So maintain the tax home and return there regularly are the two big ones.
Okay. How often do you think we should return home not to be flagged?
Mm-hmm.
Yeah, so if you're not in your tax home within, say, 30 days or so, or more every year, every 12-month period, that's putting yourself at risk. So you should make sure you're at least 30 days per year. And also, sort of the next question with that would be, don't stay in one location outside of your tax home for more than 12 months out of a 24-month period. So if you're a resident of, say, Colorado and you're out in California, if you're there in one area within California for 12 months consecutive, you could be at risk there of becoming essentially a California resident. And then losing the status of losing the tax-free stipends that you would have gotten otherwise.
Okay, got it. And then the 30 days, do they have to be consecutive, or it's just throughout the entire 12 months?
So they don't have to be consecutive. It could be throughout. It could be a week or two here and there. And yeah, as long as it adds up to that or more.
Okay, sounds good. And then expenses at home, do you mean like when we visit home, we should use like our credit cards at home, or do you mean like we should be paying some sort of like rent or maintenance or all three? What do you mean by that?
Yeah, no, that's a good question. So the main thing there is it could be all three, but it needs to be a recurring living expense. So while you're on the road, let's say in California, you should be paying lodging, rent, or mortgage, or some sort of living expense at home at your tax home regularly, consistently during the year. And it should be a market value type of number. So there's no set number, but it should be something that seems reasonable, not a $25 gift card. You know, it should be something reasonable for the area for a room rental.
Okay, sounds good. Because I know a lot of travelers, they use their parents as their tax home. And in terms of like, should they be signing a lease, or should they be like keeping it on track in a spreadsheet to be like, okay, this is when I'm like transferring and wiring money to you, and then like, do they have to also claim it as income? Like, how does that all work?
So the way most people do it now, and this is it works well. Everything is kind of electronic these days, so there's a nice trail, a kind of easily accessible record of payments. So if there's a Venmo or a Cash App or one of those apps that you can use to transfer money, that's one way to keep a record of it without going too overboard on the administrative side.
Right.
There doesn't necessarily need to be a lease. It doesn't have to have a signed lease or a document. Just some consistent record showing payment would be sufficient. If there is a lease, great, but it's not required. And then as far as the rental income for the parents or the friend or whoever it may be, if someone's renting out their property or their home for income, they should be reporting that income on their returns. However, it's most likely the case where they'll have expenses that would offset the limited amount of rental income that they're getting. I would assume, not always probably, but in most cases that's likely. So it's not likely to have a big tax impact on the recipient of the rental income.
Okay.
That was going to be my next question.
It just depends on the circumstance.
Great sideline into that.
I'm sorry?
That was going to be my next question. Do your parents have to claim it on their taxes as income? And you answered.
Okay. Yeah, they should. Yeah, they should.
Okay.
And then hopefully they can have some offsets to reduce it.
Mm-hmm. Great.
And as far as is there a 50-mile limit for local traveling, or is that just a myth? Because we hear that all the time.
Yeah, the 50 miles. I would say it's more myth than a rule. It's kind of a generally accepted number. It's not the IRS's number. It's more of a number that I think in the years past companies use that as a way to dictate their internal policy to give allowances for people if they're traveling. Mm-hmm. The IRS has not adopted it formally, but it is still used as a reasonable approximation of the distance. Really what matters is it far enough to require an overnight stay? So that's kind of the language. It could be 45 miles or it could be 70 miles. In some cities, it's a bear to drive 50 miles in one day and you stay overnight. And that's sort of the determining factor. If it's close enough where you can drive home every night and you do drive home every night, it's not a travel assignment. It's just not. And then you're not duplicating expenses. So then you wouldn't technically be eligible for the stipends tax-free.
Okay, got it. Okay, and let's say, what if someone like listening right now was like, oh no, I've been a traveler for X amount of time, I haven't been like duplicating those expenses. Do you suggest that they like go back and say like, okay, I've been traveling for a year, I'm gonna like pay my parents like this lump sum amount of money and then every month, or should they just start from like today going on?
Good question.
That's a good question. You could, you can go back and kind of make up for it and say, here's the last several months' rent, and then be consistent going forward. That's not necessarily going to, fix the issue. If it were to come up, that might not be enough. But it's at this point, if you're already at that point, it's better than not doing anything. Okay. But ideally, you want to pay it consistently throughout.
Okay, got it. Cool. And then with like the 24, so you had said you can't stay in an area for 12 months in a 24-month period. So does that mean a state or like a metropolitan area? Like, can you talk a little bit more about that?
Sure. So no, that really means more of a metropolitan area. So if you're in, Southern California, Orange County, Southern California, then you're going to be up north. It's a whole different ballgame. You're okay there.
Okay.
You shouldn't be in the same general area,
Okay.
geographical area.
Okay. Great. That's awesome. And then how does sorry, go ahead, Ryan.
Go ahead.
No, it's okay.
I was just going to ask, what are some huge red flags for auditing for travelers? So we talked about not duplicating expenses. Are there any other huge red flags that you've come across?
So, yeah, there's a couple things that's not so much on the traveler side, but it's sometimes maybe on the agency and how the pay packages are set up.
Yeah.
If you're a traveler, a red flag would be to take a very, very low hourly wage.
Mm-hmm.
There should be the wage should be reasonable for the level of skill that this travel healthcare professional provides. So sometimes it's not common. It's really not a common thing, but there are cases where an agency or somebody will be paying a very low wage and a very, very high stipend. And you just want to make sure that if you're accepting a position, that the wage is in line with a reasonable number, and tax-free stipend is also in line with what's allowable. That's one of the big red flags. You don't want to work for $10 an hour as a trained professional healthcare provider.
Yeah.
I was always told that it's $17. You should never go under $17. Is that true, or is it case by case based on the area you work in?
Yeah, I think it's case by case on the area, but that's a number. I mean, that might even be a little bit low, but that's a number I usually see that or higher. But in some cities it's a lot higher. In some very rural areas it might be 17. Some cases we've seen a lot lower, and that's when we would say we should be proactive and report some income here.
Yeah.
So at least you're doing it the right way, and you're going to protect yourself in case of any audit, because that could be a flag.
Yeah.
Could be a red flag.
Okay, got it. Cool. And then I actually have are you, as a traveling healthcare professional, how many years back can they audit you? Yeah, I guess that would be my question.
Well, okay, so the IRS could technically go back as far back as they want if they have reason to believe there's a significant, the bad word of fraud or something like that going on.
Okay.
Normally they would not do that. 3 years they would go back, probably. Typically they can go back if there's just belief of just a normal audit. But they do have the right to go back as far back as they want if they really see evidence or believe they have evidence of a fraud. Okay. Tax fraud.
Okay, got it.
It's a scary word. Tax fraud is a very scary word. It's not something that's common. Yeah, that's the worst case scenario. So, believe it or not, travel professionals have a low risk of audit. Even though you're in multiple states, there's not a high risk of audit, unless some of those things we just talked about come up. But generally speaking, it's pretty low risk for an audit.
Great. And so when we're looking at a contract, I do know a lot of recruiters tend to give us a gross bill rate, and they're like, okay, this is how much you're going to get paid. How much, can we kind of calculate in terms of how much the home state is going to be taking out versus the state we're actually traveling in? Because I know that some people just take the rate and then, we get the paycheck and we're like, oh my God, how did they come up with this number?
Sure. So most states have different tax rates, but in general, 3-4%, sometimes 5%, or even a little higher as the income increases for the states. That's generally what you'd expect. Last year and a half, there's been some significantly higher wages paid in the travel healthcare field because of COVID and things like that. So that's increased that number a little bit, but usually I would say 5% is kind of a high-end ballpark for most states. And now you don't have to factor in 5% for every state. Your home state, you're not going to be taxed twice. So if you work in Colorado and California, it's just going to be one state that's essentially going to tax you. So it's not like it'll be 10% in that case. It'll still be around 5%, maybe even less. You would just be eligible for credits to your home state, tax credits to offset that. So that's getting a little more involved in the tax prep process. But we do see lots of cases where a traveler will come in and say, oh, I worked in California, I live in Colorado, I owe Colorado $1,000. Why? And that's probably because they missed the tax credit that Colorado would give them for the taxes they paid to California. So, I mean, it might be getting a little nuanced here, but that does come up sometimes where a traveler will pay both states by accident,
Right.
not knowing how to prepare the state returns. And so we fix, several of those every year.
Okay. Got it. And then how complicated is it to like file for like taxes in each state? Is that a complicated process?
Yeah, it's super complicated. I'm the only person that actually can do it in the whole United States. So we should be caught. No, okay. So this question also comes up a lot from travelers. So sometimes, I would say if you have one state or it's a home state, it's, maybe you're comfortable doing it on your own. I'll be very open about that. Although I'd be happy, we'd be happy to do it. We would love to. That's what we do, and we're here to do that. But at the same time, it's not always necessary. But there are cases where when you have a few different states, sometimes more than one state, other things going on with maybe stocks or crypto or securities, things like that. That's been coming up a lot more often these last couple of years. So in that case, it makes sense, and I would think, to have a professional with experience and training in the field. I'm not the only one out there that does it, just to be clear, but I would recommend in those cases that you find somebody who has that experience.
Okay, that makes sense. Also, I just want to say, anyone in the chat, if you guys have questions, like, feel free to pop them in. We will be saving this live if you like popped on late. We covered a lot of good information in the beginning. We talked about like the 50-mile myth and rule, and then also like tax homes and things like that. So feel free to ask questions. Yeah. Ryan, do you have any questions?
Yeah, I just wanted you to explain your process and how we would go about signing up with you and doing our taxes with you. Both Em and I have the privilege of doing it with you, so we know your process, but can you explain to our users?
Yeah, let me go through that now. So we have an office here. I'm sitting in the office now in Coral Springs, Florida. It's just south of West Palm Beach. So we do welcome clients, even with the COVID. We wear the masks and all that good stuff, but we do welcome visitors if people are traveling in the area. We see maybe, I don't know, a couple every week or so come in. They happen to be local, but for the most part, we're working with travelers who are all over the country. So we have essentially a remote process, and this was the process even pre-COVID. It was more of a remote process where we would do phone calls, we do Zoom calls, we do email. So we have a tax organizer form that we would send out to the traveler. It's more of an intake and interview form where you would fill it out, send that back to us. We use a web portal, a secure web portal, where you can upload your forms, the tax organizer form, your W-2s, any other tax forms you might have. So once you have access to the portal, you'll upload the forms to the portal, along with the tax organizer, and then from there we would prepare the returns. And during that process, if we have follow-up questions or things like that, we would call you or email you and reach out and kind of go over any open items before we deliver a draft to be reviewed. So we would send a DocuSign with the draft of the tax returns. You'd review those, and we'd go over them one more time, and then once you're ready, we would e-file with your permission. That's basically the process.
Right on. Cool. We do have a couple of questions that people have popped in. What are things that you can do to help solidify your tax home, like keeping your car register to vote there, etc.? Yeah,
so a couple of things there. The main thing is make sure that you return there. Those are the main things. Return there is one. Don't abandon it, physically abandon it. Always go back and spend time there, and if possible, work there. Between assignments, or pick up per diems or PRN if you can. If not, that's generally okay. But the other thing is, like we talked about earlier, is to make sure that you're incurring expenses there consistently, living expenses. And it's not just a cell phone bill or a car registration. It's a living expense for the home.
Mm-hmm. Okay, gotcha. And what if you have a per diem in another state? Does that make it do you have another tax home then, or is it does that matter?
No, so you can essentially have a travel job as a traveler and not receive stipends. You can go take a 3-month or a part-time or a per diem job anywhere outside of your tax home, and you can be considered a traveler. Yeah. Technically, you're just not getting the stipend. So it's perfectly okay to have a travel job, let's say, and also a per diem job, either in time or even in a different state.
Right.
Yeah.
And I guess this one is just goes out for like all the nurses that were COVID and claimed 99 on their taxes so they could get everything back.
Yes.
I guess they're just, how much are they going to end up owing if we choose to do that? Does that affect our stipend? Like, any insight on that?
Yeah, this year more than any, we've seen a lot of cases where the withholdings were lower than should be, and I think a part of that was because the income was so high, and they were seeing this. You guys were seeing, the travelers were seeing such a large chunk being withheld and taken by taxes. So if you put 99 or even put exempt from income tax, you are going to end up owing it most likely if you do that for more than a few weeks. You know, some cases you do it for a month or two, and then go back to regular. It might not be regular withholdings. It might not be terrible, but you know, to say how much you're going to owe, it just depends on your overall income and your tax bracket and a few other things that might be going on with your finances. So it's hard to say how much you might owe, but the general traveler, you know, should be setting aside at least 10 to 20% of their income to federal income tax. You know, maybe on the lower end 10 to 20.
Great.
Got it. And I mean, is there any exceptions, I would say, with COVID? Like, what if people were working COVID and like couldn't go home this year? Do you think that's going to be a big red flag for the IRS?
So yeah, I don't know if it's going to be a red flag. There's been no guidance given by the IRS to say, hey, we're going to be lenient because of the travel restrictions.
Yeah.
But my gut feeling on it, and this is not necessarily rooted in tax code or guidelines, my gut feeling is that the IRS is not going to be sitting there saying, well, you didn't go home for 30 days because you were locked down in COVID, you're going to get in trouble for this now.
Right.
That's kind of my gut feeling on it. But again, they haven't come out with specific guidance on that. I just don't see it as being a big area for the IRS to focus on. You know, that's kind of how I've been looking at it.
Yeah. Yeah. They probably have bigger fish to fry at this point.
Much bigger. They're still behind. They haven't. There's 2 million tax returns from 2019 that haven't been processed yet
Wow.
by the IRS. They've been filed, but not yet processed. They're very, very far behind.
Wow.
So refunds are taking longer this year, and there's been a little bit of that delay for, usually it's 10 days, sometimes less or more, right around that window. But now this year, sometimes it's been 2 and 3 times that.
Wow.
So
okay.
they're overwhelmed.
I don't want to give away all your expertise when filing, but could you give us at least a couple things that we didn't know necessarily we could claim on our taxes that travelers can claim, but we necessarily wouldn't claim if we were doing it on our own?
Well, I think the biggest one would go back to the state tax credits. You know, if you end up owing your home state a bunch of money, that might be to me that's I shouldn't use the term red flag, but to me that's a sign that maybe something's not right. If you owe your home state money or a bunch of money, you know, more than you think you should owe, that might be a indication that it wasn't prepared properly and certain credits weren't taken properly. That's one of the big ones that I kind of always look for when I review prior year returns. How are the states treated? In terms of tax deductions, there, as a traveler, as really any employee, any W-2 employee, the deductions are limited now based on the new tax law, the newer tax law from 2018. Most of the work-related expenses are no longer deductible. They offset that with a higher standard deduction. And also the existence of the stipends is really meant to cover those work expenses anyway. So you're better off getting the stipends tax-free. That's better than actually just taking a deduction for the expenses you have. I'd much rather have the stipends tax-free and not get a tax deduction. That's kind of how it's set up now for most travelers. If you're working as a 1099 contractor, then that's different. You have a lot of ability you're open to deduct work-related expenses at that point because you're not an employee, you're a 1099 contractor.
Right.
There's not so many of that. There's some of that going on now, but for the great majority, you're still W-2 employees. So that does limit the deduction.
Got it. Okay. We got a question that said, would you suggest paying the IRS in a full check if you're able to, or making payments?
Well, if you choose to make payments, they'll charge you for that. They'll charge a fee to set up a payment plan, and they'll also charge some interest. So if you want to avoid that, you pay it up front. The interest is is not terribly high, but they do charge, I think, $150 fee just to set it up. And then if you miss a payment, they can essentially call it all back. And so it gets a little bit tricky. I would say pay it if you can pay it.
Mm-hmm.
Some people are electing to spread it out and pay it over time, and then using that money to invest or do other things with it.
Sure.
That's really not, that's a personal choice. From a tax perspective, I would say if you can pay it, you should pay it.
Okay. Sounds good. Cool. Thank you so much for all this information. So good.
Thank you for your wealth of knowledge.
My pleasure.
Both Em and I are using Joe for our taxes this year, and if any of you guys want to use him, just mention MedVenture for a discount on taxes if you haven't done them yet. You have until when?
May 17th is the deadline, and believe it or not, I actually enjoy talking about this stuff and doing it as well. So that might sound weird, but I enjoy it. So this is fun.
Yeah, thank you. And you could also follow him at Travel Nurse Tax on Instagram, right?
Mm-hmm.
Yes, yep. Travel Nurse Tax Prep is the Instagram handle.
Perfect. Yeah. And he does tax prep for all travelers, so it's not just for nurses, so you guys can all use him.
Yeah, that's right. And also, for the most part, we take calls all year from travelers with questions on assignments and things like that. And on our end, the hopes are that you would use us for tax prep. But if not, sometimes we'll just answer questions and spend time trying to help people so they're set up the right way. And then maybe next year you'll call us back. It's kind of how we look at it, as a service to help.
Mm-hmm. Mm-hmm.
Well, we know you helped so many travelers already by doing this feed, so thank you so much.
Awesome. Thank you guys very much for having me.
Awesome. We'll be saving this in case you popped on late or had to leave early. So thank you so much for your time, Joe.
Thank you.
My pleasure, Emily. Thanks again. Thanks, Ryan.
Thanks everyone for watching.
Great. Appreciate it. Bye-bye.